Happy Saturday at precisealgorithmtrading.com. It is Saturday, May 20th, 2023, and let's go through the markets. I'm not going to spend a lot of time today. I want to bust through this pretty quick. So, really, I don't even know if there's a lot to get into other than we've had the breakout from the triangle pattern over here on the right hand side on the S&P 500. And Friday was a little pullback after a big up day Thursday, which totally makes sense in the scheme of things. We have a buy signal on the True Momo indicator down here. Um, yeah, so that's that. I have the fibs drawn on here, the Fibonacci's, and we are, you know, we've hit the 100% line, and there's the 1272, and I'd say that's our target, but we've also got all these target dots. So, yeah, all right. Then the so let's look at the indexes because the S&P was down 0.14%, the Dow was down 0.33%, the Russell was down 0.62%, the Nasdaq was down 0.24%. So really all within a percent. They're all gonna, I you know, they obviously all have their own character, but the Russell here is on a buy signal on the daily basis, but not on the weekly basis. The although this is a great place to pick bottoms if you can or if you want, but you better be ready to get out if it happens to fall through the floor here. So the Dow that's a buy signal on the daily. Not a full-fledged buy signal because it's still a red candle, but it's good enough, and you also have a buy signal on the weekly. So that's pretty good actually, and it's a green candle on the weekly. So that would be, if you look at the market, like its job is to, you know, keep people out of the right direction. This is the type of situation where you have not even a full buy signal on the daily, but you do on the weekly. It's the kind of thing that it's counterintuitive. So the Nasdaq has been just power and higher, and this happens to be the 12-month or close to the 12-month highs. Basically the yearly highs, and we're into them. We're in a squeeze that has powered higher. I'd expect this thing to take a break here pretty shortly and do a pullback. Maybe even a significant pullback into the moving averages here. Although that's our target that we drew on here way back, and I don't remember when we drew it. That was the low point when we drew it, though. And we're really close to hitting that target. So, will we hit that target before the pullback? Who knows? So, but right now, the weekly and the daily are both still looking pretty good. They're both green, green, and green, and the True Momo indicator it doesn't look like it wants to pull back at all. So, the 10-year note, that's a measure of inflation. Obviously, it's not near as high as it was back in March, so hopefully it doesn't get legs, and the monetary policy of our wonderful government actually continues to push that back down again. The Dow transports, um, there is a buy signal from actually Thursday. It's not a full-fledged buy signal, and we're red on both charts, both the daily and the weekly time frames. So this one's lagging, similar to the Russell. Oil is starting to show some signs that maybe we've put in the second bottom, and this thing wants to go back up again. So, all right, so that's that. Let's look at bonds just because. And so bonds have Do we have a sell signal on bonds for the week? We really don't. So that's sort of fascinating. It's in a big rectangle pattern on a weekly basis. And, you know, if it gets down here below this 98 level, 98, 90, whatever, that low of that bar right there, 98, 88, if it gets below that, then we're going back at least down probably to the levels that we've seen before. Otherwise, this thing could possibly pop in reverse, and when it does that, it's going to be unexpected to most people that would be trading it. And then just to show, even on individual trades, um, some ABC I've got here, that thing's been going higher, and that's nice. But, and I'm just picking random ones, but the one that's not random is the one that fell apart on Friday. I held through earnings, and I should have given myself some protection and protective stop, or halved my position or something like that. This is what you don't want. So, you know, this is one of those things that says be careful. We were powering higher, and you know, earnings can do anything to you. They can go either direction. The good news is this is just one position out of, I don't know, 30 or so that I have. So anyway, it's just a kind of a life lesson there. Protect yourself, or make sure that you reduce your risk. And I actually got burned by this one a little bit more than I wanted to. So yeah. Anyways, let's flip over here and look at the bullish percent indexes and see what the underlying markets are doing on a basically a supply and demand basis. Let's look at the industrials. No movement on Friday. The NYA up 0.36 on Friday percent. The transports popped nicely up. So the transports are showing some strength under the hood, even though they're not really showing it on the actual charts themselves, like we just looked at. So that's kind of what we're looking for, is, you know, strength here that turns into strength over there and basically supports it, and vice versa. Um, the NDX, I went backwards here, but that's all right. The NDX is the NASDAQ 100, and it tacked on an X, so that's pretty bullish. Went up 3.08%. The might as well look at the OEX, which is the S&P 100. It tacked on 1.85%, but it's still, I mean, it's on a column of those, so it needs to really get up and going if it wants to turn into a new column of X's and make it more bullish. The SPX, it's the S&P 500, tacked on 3.02% in the face of a down market. So if you think about what that means, is 3% of the stocks in the S&P 500 turned from a point and figure sell signal to a point and figure buy signal. And they did that in the face of when the market was actually going down. Again, counterintuitive. So that's it. You can look at energy, and you can look at financials. You can look at healthcare individually down here if you want. Wonder what utilities looks like. Okay, it didn't move. So then finally our automatic trading system, which is really what we are mostly into. So this is the Dow, and this is the quarterly contract, and it's been getting up and going here lately, which is nice. On a yearly basis, which is what I try to pull up for weekends. So this is 519 to 519, so of 22 to 23, and this is the pattern we've seen lately, which is a couple months of back and forth. This is the Russell 2000. These are futures contracts, E-mini futures. This is the quarterly contract. And I don't know why I don't have the yearly contract deal on here. now that I look at it. So anyways, the yearly looks just fine too. Take my word for it. I don't know why it's not on here. And then here's the NASDAQ, which is really our, I mean, they're all really good right now. So this one's pulled back hard lately. So this is literally to get you to stop trading. I mean, it's, well, I don't know if this is the type of action that makes a lot of people stop because, hey, I was up here and that's great. And then it takes you behind the woodshed. But then this is what it looks like on a yearly basis. And that's a great looking equity curve. Will we see one of these? We could. Will we see one of these? We could. That's pretty similar, by the way. You know, what we're in for is the long haul, which is a lot of green dots. So this is our equity curve, and we're experiencing a momentary pullback. And the other thing to take from these is the distance as far as time goes between the dots. So that's what I got for you guys. Take care, have a great weekend, and we will talk to you Monday night.